Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look into ENPH today, focusing on its earnings per share and price to sales ratio, both currently and based on management's guidance as provided, which in this case will bring us to period ending December 31st, 2023. Then we'll close by applying our findings to its current technical chart. Before we get started, please hit that like button and subscribe. There are chapters below if you want to skip ahead, and if you have any questions or notes, let me know in the comments below. To begin, I have at the top ENPH's current earnings per share for the trailing 12 months, totaling $3.97 per share. The quarterly earnings making up that figure is in the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items, mainly how sporadic its PE ratio can be, especially over a focal range of 4 years, at certain periods spiking up to over 200 and in others dropping to a more modest 20. Using my best judgment, the range I find reasonable in this case is between 65 and 130. This metric may not be best for this company, but we will track it and hopefully gain more consistency over time. That said, with this range, we will multiply it by the current earnings per share to get a fair value range of 258 to 516. Thus, its current price of 134 appears to be a screaming deal. Again, while its PE ratio is volatile, its PE ratio right now is nearly the best it's been in the past 4 years, which is worth considering. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, totaling $2.7 billion, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, which is 143.9 million as of its last earnings report. We divide those two figures to arrive at a sales per share figure of $18.86. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 8 and 18 times sales over the past 4 years, with an average of about 13 times sales. Also, similar to its earnings per share, its price to sales ratio is a more volatile case, but definitely more reasonable than its earnings per share. Personally, I feel more comfortable using this metric, but we're going to include both as each is important to consider. That said, using our established range and multiplying it by its current sales per share figure of $18.86, we obtain a fair value range between 151 and 339. The result being its current price of 134 appears to be a good deal. Let's now look at the forward guidance. Looking at management's guidance, they have provided the following projections for its fourth quarter ending December 31st, 2023. Revenue is expected to be between 300 and 350 million. Gross margin to be between 46 and 49%. Operating expenses between 142 and 146 million, and a tax rate between 21 and 23%. For our purposes, we're going to split each of those ranges right down the middle. When we do that, we arrive at net sales of about $2.3 billion and an estimated net income of about $426.1 million. Forecasting that the shares outstanding will remain about the same at 143.9 million shares, we arrive at earnings per share of $2.98. Then, using the PE range established earlier, we arrive at a fair value range between 194 and 387. Even with the fair value range pulling back, the current price of 134 remains to appear as a good deal. Pivoting to the price to sales ratio based on management's guidance, we can see the shaded portion is the same as the previous slide, so I'm going to focus on the unshaded portion. Using management's guidance, we can calculate the future projection for sales per share of $16.08. Then multiplying this forward guidance by our reasonable price to sales range of 8 to 18 times sales, resulting in a fair value stock price between $129 and $289, the result being that the current price of $134 is at the bottom of our calculated fair range when looking ahead at next quarter. As a summary of our earnings per share calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. As a summary for our price to sales calculations, at the top we see where it stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Otherwise, we have noted that the stock has been in a downtrend since September 2022. It may have found support near $75 and turning itself around, as it has not seen this much consecutive upward momentum since its downtrend began. Our next noted support point is $60. That's if it continues downward. Because the price is below our green box this period and near the bottom of our green box when looking ahead to next quarter, I like the price. Let me know your thoughts in the comments. Thank you for watching. Please like and subscribe.